All right, guys, welcome to June 20th Trade Findings and Adjustments. I'm Keith Bybee with you again. And if you could let me know real quick, you can hear me good enough, and we'll go ahead and jump right in. Not seeing anybody yet letting me know. Can you guys hear me? All righty. Thanks. Thank you, guys. All right. So let's get right into it. So just to recap from last time, we talked about Fed meeting on Wednesday, which happened, and the market so far is liking what Fed Powell had said. Obviously, they didn't raise rates for June, but there was an indication that there could be rates cut. There wasn't cut for June. I think I said raised. There was an indication that they could have a rate cut sometime this year, and that was received quite positively by the market. So we are up today. Let's just check out the S&P real quick. Had a big, nice gap all the way up to back to our all-time highs. So be interesting to see how things continue on. Right now, because of that, it's kind of what Kevin has mentioned a few times, which is we could see bad news as good news, where the market is seeing any economic indicators or whatnot coming out as if there are signs of economic slowdown or any somewhat bad news in that regard is positive news, in the sense that the market is then going to perceive that the Fed will go ahead and cut rates. So that's where we're at today. They also, Powell also mentioned, as I was watching his interview with the media, that one of the indicators that might convince them more is obviously trade. If that, I guess, continues to drag on a bit longer or whatnot, but he said that was just a small part in what they were looking at. I would think that any trade resolving and good tweets and good news should also push up the market. So I don't know. It's kind of weird that, on the one hand we have bad news becoming good, and yet the market still wants to see a trade deal happen. So that will be interesting to see how that plays out. For now, today, I wanted to take a look at, real quick, Baidu from last Tuesday, just to check on that. Did any of you get filled on Baidu long calls, or is everybody still kind of in the September bull call process? Just to go back as a reminder, we did have Kevin's account here still in the 180 September calls, and added June 2020 135 calls. Which is looking okay. I mean, it's not breaking out yet. We want to see it get over the 120. Looks like somewhat of a resistance level, but I would think not too much. And any more especially good news on later on down the summer, how earnings go and how the G20 meeting with Trump and Xi goes, could shoot that up pretty quick, obviously. So that's all still the same. Still, I've already talked about that. So the other one I was looking at today was possibly an AOBC, American Outdoor Brands Corp. They opened big on a earnings beat and opened it at 10 and pulled back all the way to 925 and is settling around 950 this morning. So kind of a crazy range to be starting that bull trend in, but good numbers coming out from AOBC. As a gun guy like Kevin, I would expect there to be some more political pressure coming towards the election fall, where if the worry of Democrat taking over as president gets a little more hyped up and worried about, gun sales will shoot up. So everyone feels like they need to get get their guns before the gun grabber president comes in, possibly, and starts helping Congress with legislation. So with that said, let's look at possibly a bullish type trade. So part of the ones I was looking over was a bull call out to January 20, which gives just enough time for kind of getting up to the fall period. It is plenty of time, but assuming we're getting that political gun buying bump towards the fall, I still wanted some protection in the form of a short call. So I was looking at this possibly. I'm not going to put this on for Kevin's account because he's got only $1,000 and he's kind of tapped out as far as got plenty of opportunities and good trades working their way through, where I didn't feel like this one necessarily made sense for adding it onto this. However, with $70 at risk, maybe one could be even worthwhile. Let's check out two. So for this one, we've got a almost 2.5 or over 2.5 reward for 1 risk. And I do kind of like to see that on one hand, it hasn't kept going up from 10, just because that also gives us an opportunity for it to continue to go up. It's not overbought on the RSI. It is a bit on the Williams %R. However, it could easily stay in the upper range of that Williams %R as it continues to go up, maybe a little slower. And so I was looking at, we had a 10 strike January 20 call with a 1250 strike short call out to the same expiration date. And this one's kind of good. It's kind of cool because you can customize how much risk you really want on this, and only 2 is nice for maybe something like Kevin's account here, where we really don't have a ton of cash. He'll probably be looking at cashing something out at some point, like he did with Under Armour, to free up some cash and take some profit somewhere. But you can easily go up if you've got some more room. You can go up to, let's say, 5, and that even leaves room for dollar cost averaging. If it kind of stays flat, goes down a bit to test the $9, $9.25. I would say is the closest support level outside of a pivot point at 9.46, but that's kind of where it's at right now. So 5 contracts puts you at risking $350 with a maximum profit of 900. I mean, even that's not too bad. So pretty easy to go ahead and judge what you want to do as far as how much you want to risk to take. This is a good one to go for. If you want to also consider, I would look at even going out further, where for just about $2.08 at a 10 strike January 2021, for 575 days, you've got plenty of time, and it's dirt cheap. Where if that 10 strike is held and the price goes up to 12.50 or 13, back up here, you've got plenty of time for that to happen, and it's just super cheap. And again, you can customize how much risk dollar-wise you'll take there, and of course, like we do with the leap long calls, if it falls, you can add more contracts. So that could be one that is nice for maybe an account that is a little more tapped out as far as buying power, like this one is, and gives you plenty of upside potential and a nice little addition to an account. So that's what I was thinking there. Another option would be to do a covered call, where you could go maybe out to September, looking at, so if you bought 100 shares, get the calculator up here, about 100 shares going on a 100 share basis at about 950, and you took in credit of over here at 12 strike, which is I think our bigger resistance level. You get it at 15 cents about. I assume what you could probably get it filled at today if you set a limit order for that. And 15 cents gives you about $1, or excuse me, 1.6% of protection. Gives you plenty of upside potential. You could even go closer to 11 strike. Let's see what that does. 32 cents. That gives you 3.4% protection and still $1 of upside as well. So those are some good thoughts. If you're looking to get into the stock, that would be a good recommendation. But I think for this one, the one I like the most would be probably this. Our bull call spread, 12.50 strike spreads on our calls all the way out to January 20. 75-cent limit. Let's see. For $225, I'm going down to 3 contracts for Kevin, and I think I will put this through for him. Maybe he'll swear at me and say, "Dang it, Key, what are you thinking of?" But we're really looking for opportunities that can continue to go up, especially from these ones like Baidu. We're still kind of in waiting for the Boeing to come through for us. Bank of America, where some of these have pulled back for the silliest of reasons, and we can profit from their way back up. AOBC is more of a good fundamental reasoning why it's headed up, and even though it didn't keep its highs today and dropped down pretty quick, you still have a support level that you're at. And they beat their earnings so nicely, and I would like to see that go. I would hope in the next month or two all the way back up to 12. But we want the time for that to happen, and out to January was short enough for me where I felt like I did need a short call option to protect a little bit, but long enough where I feel like if we don't get a huge bounce through the summer, we can get maybe something in the fall. So that's where we're at. I am actually going to put this one in, and if Kevin doesn't like it, he can complain at me. And let's see if it gets filled for, you get 75-cent limit debit. Filled immediately. All right, so I'll write that in. Any questions on that or concerns or other thoughts you had this morning? Go ahead and think about it while I type this in. All right, I got a question. Can you please explain this conundrum? May 20th, buy to open 2 long calls at 20 cents today. I think you mean June 20th. Buy to open 2 long calls at 20 cents today with earnings beat. They are worth 23 cents, loss of $35. Are you saying you put this order in for something, Ida? I'm a little confused by your question. Purchase date was May 20th. For what? What was purchased? So buy to open 2 long calls at 20 cents today with earnings beat. I'm a little confused, Ida. Are you talking about 2 long calls on AOBC that you had put on today? Were you seeing a spread or a purchase on your account? Okay, so 2 long calls with AOBC purchase price 20 cents per contract today. They're worth 23 cents. What strike? And let's see, let's go to AOBC. I would unmute you, but I don't have any speakers set up to listen into you, so it wouldn't help me hear you. Sorry about that, Ida. You're gonna have to work with me here. The 2 long calls of AOBC you purchased for 20 cents, and they're worth 23 cents. And it told you the purchase date was May 20th. I'm assuming you're using E-Trade, but I would, if that's the case, or whoever it is that you're using, whatever broker, I would call them and ask what the problem is. But you're asking why it's showing a loss of $35 if you have a 20-cent contract that you bought. and it says it's worth 23 cents. Strike $10 premium, 20 cents today with less than 1 cent. The Ameritrade. I wonder if part of it is they charge like $10 per contract. You bought 2 contracts, so that's $20 or something. So maybe it hasn't gotten up past that. It's adding in, I guess, your cost of placing the trade, possibly. I would just do your math and go to your orders and just see exactly where you got filled at, what the fee was, and strike $10 strike out to what was the time, what contract date of the contract that did you purchase, Ida? Assuming if it was $10, probably closer to July or something. July 20th, or excuse me, July 10 strikes, which is trading at 20 cents. I can't explain the purchase date of why it was May 20th, or unless that was just when you had bought them. But all right, sorry, Ida. I wish I could piece that together for you. I would assume that part of it is either it's just the platform not quoting things correctly, and in that case, I would just call them and find out what the deal is, or possibly just do some math and see where your true cost basis with the trade fee, commissions, and whatnot is with TD Ameritrade, and go from there. Sorry, I can't really answer exactly what's going on there, but that's what I would do. And hopefully you've got some time in that one. If it's July, I would just roll it out and buy more time. If you're not profitable yet. Otherwise, sorry I couldn't be more helpful there. Guys, is there any other questions before we wrap it up? All right. In that case, I'm just going to fill this in. If you have any more questions or you're still thinking, go ahead and let me know, and I will write this order in so we've got it. $1.13 is what we paid. Sell to open a January 20. Shouldn't say 20th. It's January 2020. long call, and we took in $12.50. Excuse me, not $12.50, 38 cents. So $12 was the 50-day resistance level. Which is why I capped it there. So cost basis in this trade was 75 cents. Good cheap contracts to see if it runs up. After their earnings beat, and also gun sales towards the fall. All right, guys, if there's no other questions, Ida, sorry again, I couldn't help you out there, but I would definitely call up TD Ameritrade and take it up with them. Some of these platforms, the quotes don't always happen correctly all the time, and it just needs someone to point it out, and hopefully their coding team can fix it if it's a problem, or at least explain what the deal is. So no other questions, guys. Appreciate you joining me this morning, and Kevin should be back for your Monday night market views commentary. So appreciate you joining me, and we will see you then. Bye.